In this video, we're going to be looking at Palantir, ticker PLTR. If you want your own stock analyzed, throw that in the comments. We'll get around to it when we can. Now, as you can see, we're sitting at around $14.50. We're up about 7% on the day. Now, what are going to be these key levels? And again, we did cover this early this week. We got those short bias levels. Again, we tried to play the pullbacks at these highs. And a lot of the comments were, oh, it's going to go, it's more bullish overall. And again, we're looking at this from a trading perspective. We're looking at this, maybe a week out max. We're trying to get these relatively quick trades, trying to get these pullbacks or, trend trade, depending on what you're trying to do. But, we're looking at this relatively short. We're not holding it long term. We're not investing in it. I don't care where it is 3 months down the line. I'm looking at where is it going to be this week, maybe within the next month. So that's what these levels are going to cover. Again, if you're looking longer term, this is probably not going to be the video for you. But we're sitting at $14.50. Now, like the previous analysis videos, we really talked about, if we're above $13, we are extremely overbought from both a 6-month and 1-year perspective. So to me, I'm never really long biased above this level. Reason for that is, firstly, the stock's kind of parabolic. So yes, some people may think, okay, that's why I want to be long bias, kind of catch this momentum. But to me, if I can define my risk short bias and I can kind of let it play out, give it a bit of time, that's going to be my plan. And that's exactly how I've played this now, I think 3 times in the past kind of 2 weeks. And it's popping into these highs. And what I'm doing is shorting the shares, buying the calls. By that, you get a defined risk, and again, you get a time frame. You can go a month out on the calls. You have a month for that to come in the money. If it doesn't come out the money in there, the call will exercise. You will cover those shares at whatever current price is. You have a defined risk, and again, you have your own time frame to do it in. So again, this is the key level. When we're above here, I'm very short bias. We can see we're obviously above it now. So the 2 levels we have above that are going to be the 13.35 and the 13.90. So the way I'd be looking at this is these are the supports on the way down. Really, again, we don't really know where we're going to stop at these highs. Again, we're starting to pull back already, so this might already be at least today's high. If it is, then again, we have the 13.90 support, 13.35, 12.70, and the $12 supports on the way down. So these are where I'd be locking in profits on the way down. Coming into this $12 at least, I'd be moving at least my stops to break even, because again, that is a 2-point move on side. Again, you kind of want to be locking in those profits, because again, it could do another pump. We've seen this again 3 times already. We've traded this, and that's why we moved our stops. So we locked in some good profit, but if it went against us, we were protected, and that's exactly what we did. It did go against us each 3 of these times now. So again, we still made money on them because we're protecting what's already made. So again, that will be key on this trade as well. If we're looking to trade it short bias, again, making sure we're locking in profits as it's hitting these targets, or at least adjusting our position as we're coming into these targets on the way down. As we come lower, again, 11.50 is going to be that next support, 10.75, 10.20. 10.20 is when I will kind of stop paying attention to it. Reason for that is then it's coming into more of a fair value area of trading. So really, to me, it's just shorting this overbought area, trying to trade it back down to a more reasonable level. So again, those are going to be my key levels on the way down. If it does continue to the upside, and again, like right now, we don't really have resistances, and that's why I'm trading it through a defined risk strategy. Because if I get short now, again, I don't have to time it perfectly. If I short it now and it continues to go against me, doesn't matter if Palantir goes up to $100 or $200, $300 a share, it would not make a difference, because we got the calls to buy back whatever we're shorting, so our risk is defined. So that's really the key thing with this strategy is, again, we usually get about a month out, maybe 2 months out on the calls. So as long as Palantir can pull back by then, which again, we would normally expect, usually you make at least a 1-to-1 on these trades. And again, the probability of them pulling back is, to me, over 50%. So that's how I trade it. Again, if it continues to go against, we're fine, we're protected, we got the defined risk. If it starts to pull back, locking in the profits in these key levels. Thanks for watching. If you enjoyed this video, you will probably enjoy this video too.